Huntington Bank shares posted its first quarterly profit last month since 2008. Ohio's third largest bank says it expects to be profitable for the whole of 2010 as an improving economy helps credit trends. The stock, by the way, also on the rebound after being pummeled during the credit crisis. Steinour is chairman, president, and CEO of Huntington Bank Shares, and he's here with us in the studio today, all the way from Columbus, Ohio. Thanks so much for coming in. So much to talk to you about. We just heard, I have to pick up on something Ray Carbone was just talking about, the concerns perhaps about a double dip. Now, Athens is a long way away from Columbus, Ohio.
Absolutely.
But do you think there is that risk down the line of another credit crisis?
There is a potential contagion if Europe were to experience a severe correction. There would be, I think, a global impact. Credit markets would certainly reprice and may freeze a bit. So this is a very real issue for us. As a regional bank, we don't see direct impact.
So as far as your loan portfolio, it's been improving, right? It
has been.
And curious for what's driving that improvement and what demand is like, especially from the main customers you serve, right? The business community, commercial real estate.
That's right. Well, first of all, the economy is improving, and so we're getting the downdraft of, or the uplift from that economic cycle. Secondly, we did a lot of work last year to identify where our challenges were, where we had issues, and we took steps to address them. And so there's a combination of a positive economy plus recognition on a timely basis.
So your commercial portfolio, commercial real estate portfolio is performing how, and are you adequately reserved, if you could characterize that for me?
We feel adequately reserved from the actions we took last year. The performance of the portfolio so far this year has been very good.
You practically doubled those reserves, right, from one quarter to the next. Am I mistaken?
Well, over the course of the year, we did double the reserves. In the fourth quarter, when there was talk about a continuing commercial real estate decline and the potential of a double-dip economic cycle, we decided to put an additional supplement of reserves away last year.
I want to ask you also about the regulatory environment, uncertain as it may be right now. We just had our Lizzie O'Leary talking about what's going on in Washington. A lot of focus has been on the big investment banks. Is it going to have an effect on your business as well, do you think?
There'll be some effect upon our business, but I think it's modest and it's on the fringes. The big issue for us as a nationally chartered bank was preemption. It looks like that'll be part of the bill. So the other impacts, I believe, will be modest for us, although very significant to address systemic risk. And unfortunately, I think there are going to be some unintended consequences we'll all have to work through.
How do you respond to criticism that the improved financial industry performance, including you as you continue to sit on your TARP funds, right, is short-lived and government-induced?
Well, the TARP funds, when they were tendered to us in the industry, it was suggested that this was something that we should be taking because of national
Is that a nice
needs.
way to say you have to take this?
Well, it was. We had multiple conversations where it was strongly encouraged that we took it. Now, in retrospect, we probably needed it, but at the time, we thought we were responding to a bit of a directive.
And your plans to pay back TARP?
We've said we'll repay on two conditions. The first is sustained profitability from the bank, which we now believe we have. The second is an economic environment that is stable and one that shows improvement. And we're hoping we'll see that.
Just quickly, I'm curious about M&A. I know you talked a little bit at a conference recently about potential or non-potential out there. Any plans?
Well, we look at a lot. We have great core or organic growth. And anytime you do an acquisition, even a small one, we did a small one last year in Michigan, there's a distraction for the technology and operations team and some of management. So if something is interesting and of size, then we'd take a very hard look at it.
But you're not aggressively out there looking?
No, we're trying to aggressively grow the core of the bank.
Okay. Thank you so much, Stephen
Thank you. Pleasure being with you.
Steinour of Huntington Bank Shares, coming to us from Columbus, Ohio.